This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 266 is brought to us by Apex Omni. If you missed last week's episode, I talked about the prop firm challenge they're having where you can sign up for free. But alongside this, they have a very outsized sign-up bonus going on right now as well. So if you've been dragging your feet on what is pretty much the privacy version of ByBit that Americans can actually join, now is the time. I mean, who else is offering a chance to become a funded prop firm trader for free? I mean, private DeFi platform Americans can join with a huge sign-up bonus and a free chance to become a funded prop trader. That's like peanut butter wrapped in chocolate, wrapped in Oreos, wrapped in Bitcoin. Like, what are you waiting for? Sign up and get trading now, because with Apex Omni, trading is your business. It is a 10-Minute Contrarian Podcast, and a quick programming note. We did the first episode in our two-part privacy series last week, and I plan on making the second part of that next week. But for now, the last day of the month was 2 days ago, and this is the time when I and all of you should be checking your monthly charts. And if you've been doing that, you are probably seeing some things you would rather not see. So I can tell you what I'm seeing right now. On monthly gold and silver, it's pretty bad. And you would expect this moment to come after we've had a run up and then a come down. The chart's going to turn over at some point. We are just seeing that turnover happen now. If you're not getting a bearish signal, or you didn't get a bearish signal last month, you're probably getting very, very close to the point where when you've seen price move up and move down like that, it would take a pretty big move up this month just to not give you a bearish signal. And then if you guys saw me post on X, I think it was 2 weeks ago, you can follow me on X, by the way, link is in the show notes. I said how gold has done a really good job actually holding that 4,000 level. And it's also, if you look at the gold versus Bitcoin chart, it has formed a higher low. And you can see this better on the weekly chart than you can the monthly chart. So what this would signify, now this is classic technical analysis, what I just got done describing, not indicators, which I favor, but when it we said this before here too, when it comes to investing, especially when you scoot back as far as we do on the monthly chart. Because you know who else does the same thing? Other large institutions who have the luxury of scooting back as far as we do. So when I mention classic technical analysis on this podcast, but not on my trading YouTube channel, for example, in a trading video, there's a reason for this. It actually does carry more weight. So when you measure gold against Bitcoin and you get a higher low, that is obviously bullish for the gold versus Bitcoin chart. Now, the problem with that is, if you haven't picked up on it yet, is if we're getting a bearish signal on gold and gold is looking strong versus Bitcoin, what does that say for the future price of Bitcoin? It's not good. Then turning over to traditional markets, if any of you go to a monthly chart of the NASDAQ, you're going to see a pretty gnarly evening star there as well, which, if you didn't know, is a classic bearish signal. So these things, contrarians, these signals are not nothing. I've even said it before. Almost every time, I can't remember the last time one of these signals failed, but anytime I actually broadcast that I'm getting a signal on something on these monthly charts, and I simply mention it anywhere, whether it's here or on X or on Discord, the rare times I do this, they've been extremely accurate. And I don't say this to boast, I say this to motivate. I mean, when you put together a good trading system and you have the luxury of scooting back this far to some of the most accurate charts, good things are going to happen. But anyway, the problem with this is Just about every fundamental case we have been making on this show since the beginning of the year is conflicting head on with our technical analysis. And I simply don't know which one to favor. So let's talk about the fundamental side. Now, we are moments away from entering election season in the United States. And if you recall, the very first episode we did this year, the big macro episode, we said, look, everything this year is likely going to hinge on the midterm elections in the United States. We just have a system now where anything that's going to happen in the broad markets is going to hinge on what the United States does. And this is actually a good thing because it's easier, much easier, to only have to focus on one moving part as opposed to multiple moving parts, which we've always had to do up until probably the last few years. Back when I first started trading, it was always, what is Europe doing? That was always the big deal. Then it later became, what is China doing? And then after that, it was, well, what are emerging markets doing? And you would have to concern yourself with all of those things alongside with what the United States was doing. Now, it just seems like nobody cares about those other things. And if you're in a different country, you can either be all insecure about this or be grateful that as an investor, you no longer have to focus on 2 or 3 different aspects and how they relate to each other, or how they oppose each other, or which one's going to mean more than the other. All that's gone right now. And so if we focus on the United States, let's look at what has gone down this year. Early on, it was looking pretty good for the U.S. and their overall hegemony as far as not taking over, but locking down, I would say, the Western Hemisphere. And then Iran happened, and that did not go their way at all, and still isn't really going their way, as far as we know, but we do know that they thought this would be over a long time ago. Now, U.S. citizens have generally been conditioned to not really care about wars that don't directly threaten us, but you have had some outrage this time with some of the pundits out there that were very, very strong conservative and very pro-Trump. And I don't quite know what that's going to do come election day. Has this been negated by the endeavor of getting rid of a lot of illegals, which Democrats brought in simply to get votes? If you're putting those two things on opposite sides of a scale, I'm not sure what that scale is going to look like. I have no idea. And coupled with the fact that people usually vote the opposite party as the president during midterms. That's just historically almost always been the case. So safe to say the Trump administration is going to have to make some moves here. And some of those moves we talked about in that big macro episode are really, really going to have to be done now. And I think the most logical move here is, especially if we actually do see some weakness start to occur in the stock market, is they are going to have to print money. They can't just get gas prices down, even though we've talked before how that does make a big difference because most people are just slow and stupid, and that's all you have to do. So many people have been talking about the increased chance of raising rates in the United States and how some of the Fed chairs have dissented, blah, blah, blah. I'm not really buying any of that. I even went to Polymarket and bet against it. I bet on the rate cut last week, which was actually it was a minus bet. It was a pretty good sized favorite. But in September, they're supposed to do it again, and that's actually an underdog bet if you say it's not going to happen. And I bet on that too. I just don't see how that is going to happen unless inflation starts to get out of control. Then they really have a choice to make because raising rates is not positive for the economy. So something's going to have to give here. It is not a good position for them to be in. So if they do print, this is going to be extremely positive for anything that is not fiat currency. So gold, silver, Bitcoin, stocks. And then if this happens and they get their way, and well, actually, regardless if they get their way or not, and then the midterm elections end, then after that, who the hell knows? We will certainly talk about that here on the podcast. What would happen once that motivation goes away. But if you factor these things in, we have a direct clash, a clash like I've never seen before in technicals and fundamentals. Now, contrarian hardcores, you might be out there saying, well, why does any of this even matter, VP? We take a very long-term approach. We are long game players. This is all just temporary noise in the bigger picture. And you would absolutely be correct. This is one of the things I want to impart to you in this episode. Even a full-blown recession, should it occur, is really nothing but noise in the overall picture. We do not invest heavy in stocks on this podcast. And should a recession occur, we will start looking at the idea of buying stocks in a completely different light. But for now, we strongly favor things which will not only defend us, but still go up during this time. It's really the best of both worlds. And if we do get a recession, and we just happen to get much cheaper prices in things like semiconductors and defense, oh, buddy, that's going to be a fun time. While everybody is freaking out over the recession, we're going to be licking our chops and rubbing our hands and becoming permanently aroused at the golden possibilities which will be laying right at our feet should an actual recession occur. But why do we even concern ourselves about this more mid-game strategy of paying attention to what's going on the monthly chart and what's going to happen this year? Well, the reason why we do that, I've mentioned this before, but if you haven't been with me for too long or if you've forgotten, I'll explain it again. We really do this to try and gauge, better entry points above anything else. And you can really do that with technicals and with fundamentals just by using simple logic and trying to understand where the puck is going. And you often do this as well in a contrarian fashion. When everybody else is saying one thing, it's probably better to look the other direction and kind of see what's going on over there and see if that side is at least plausible. And a lot of times it will be. A lot of times it won't only be plausible, it'll make a lot more sense than the popular side. Remember, financial news media is almost always wrong. And I've always felt that they're wrong on purpose, and this information is being peddled to people on purpose. But I can't prove that. So, we will just continue to look at things the way we look at things. But as far as this more short to midterm outlook goes, not only can you get really good entries sometimes from this, people, for some reason, they think I'm down on gold and silver and Bitcoin and uranium and copper. I'm like, why would you? No, I got in way early. You guys were here for that. A lot of you got in way early. And just because a lot of these things are down this year does not mean we're down. And we were able to get in early by using our own common sense and, in many cases, a combination of that and our technical indicators. But when those technical indicators are looking bearish, what this can also do is give people a logical place to sell if they are already up, provided they did not do what I always recommend you do the moment you enter a long position. So again, I do this sometimes because a lot of you are going to be like, yes, VP, I know you've been over this. But some people listening have not heard me say this, either because they didn't listen to those episodes or they're fairly new. So what you should always be doing anytime you enter a long position in investing is to go to a spreadsheet or a notepad or wherever you go and say, okay, at this price point, no matter what I'm feeling at the time, no matter what type of narrative is out there, no matter what is going on in the world, I am going to take this much profit off of the table and move my stop loss to break even. And then when price gets there, you actually follow it. If you can preset this on your investment platform, even better. Just know that on some investment platforms, you can only do it for like 12 months. Or sometimes until the end of the year, and then it stops and you have to do it again. So it all depends. It's all platform dependent there, but there is a method to this. And what you do after the trade is so much more important than what you do before the trade. So this is non-negotiable. You cannot mess this part up. Now for me, like for more volatile things like crypto and mining stocks, I generally do a 3x before I take this first profit. And then with things like big miners or anything that moves a bit slower, it will be a little closer to a 2x. And what's kind of great about this is, at least with crypto, I always try to make sure you guys know when I take profit and I put it on X. And almost every single time I've done that, it wasn't long before price came back down. Not because I'm super amazing, because that's just what price does. You get too much standard deviation and you get too big of a move to the upside. Guess what usually happens? That's just price action. And this is such, by the way, contrarians, this is such a more intelligent way of doing things than sitting there trying to eyeball it. Like, you see these people who are bragging because they took profit on Bitcoin, for example, when it was somewhere in the six figures. All right, so first of all, we do not take profit on better money. I don't have take profit levels for gold or Bitcoin. Better money is better money. I will ride out the highs and lows. Second, that person who's acting all smart because they took profit on Bitcoin when they did is going to have a really hard time replicating that feat again. And the moment they fail at this, they're going to end up with less Bitcoin than they should have had. And how many people have had that happen to them? To where they should have a ton of Bitcoin right now, but they barely have any? It's like, yeah, stop selling it. Stop trying to get all cute with it. Better money is better money. Just be glad you have it. But for everything else, there is certainly a time and a place, not just to sell, but to take some profit off the table at the very least. And this is how we do it. But stay diligent, contrarians. We do have conflicting signals in a very big way, more than I've ever seen it, right now, as we speak. And do you need to do anything about it right now with your positions? Probably not. I would say more, be on the lookout for opportunities. Opportunities to start new positions or add on to existing positions, which you know are going to be bullish in the future. Maybe not the short-term future, maybe not the mid-term future. Remember, if the stock market goes down, our copper stocks, for example, are probably going with it. But gold, silver, energy, and maybe sit back and watch for some really great deals in the tech space if we do get that drop. So this is not the most actionable episode I've ever put out, but it is a good episode, I think, to try and get everybody looking in the right directions. Because it's going to get maddening real soon. And you can either get caught up in it, just like every other idiot who's going to get caught up in it, or you can simply sit back and watch the game board shift a little bit, and then once it is done shifting, adjust accordingly. I'm telling you, the world's going to get real crazy here real soon. But this will simply not apply to us because we are not crazy. We are just early.